Hey everyone, and welcome to this explainer. Today, we're looking at what might honestly be the ultimate cheat code for understanding how real wealth is built in the world. If you're in high school, or just starting to think about your future, you've probably heard people throwing around words like Wall Street or portfolios. And let's be real, it sounds like a totally different language. Well, today, we're going to translate it together by getting right down to the mechanics of market wealth.
Okay, let's dive into this. Trillions. Every single day, literally, trillions of dollars change hands on the global financial markets. It is just a mind-blowing scale of money. To put that into perspective, more money moves through these markets in a few hours than the entire economy of some countries generates in a whole year. We aren't talking about a few $1,000s here or there. We're talking about the kind of money that builds cities, funds global technology, and creates generational fortunes, just constantly flowing back and forth. But here is the stark reality that we need to address right up front. Most people are completely left out of this flow. And why is that? Well, not because it's impossible to access, but simply because it seems way too complicated from the outside. People get intimidated, right? So they never even step onto the playing field. That's exactly why breaking this down today could be an absolute game changer for your financial future.
So let's treat this whole thing like a video game and beat level 1. What is a stock? The core mechanic.
For anyone watching who thinks this is going to be incredibly difficult, I promise you this isn't advanced calculus. The stock market is simply a place where people buy and sell ownership in companies. That's it. I want you to focus heavily on that keyword right there, ownership. A stock isn't some magic invisible lottery ticket. It's not just a random number floating in the cloud. The market is basically just a marketplace, kind of like a grocery store or a sneaker exchange. But instead of buying apples or shoes, you're buying ownership.
So, the crucial point is, when you buy a stock, you own a small piece of that company. You have a direct, real-world connection to that business. Think about it. If you buy a share of the tech company that makes your smartphone or the brand that makes your absolute favorite sneakers, you are officially a part owner of that business. You literally own a tiny, microscopic slice of their factories, their ideas, and their profits. How cool is that?
And here is the basic logic of that ownership. If the company grows, your piece inherently becomes more valuable. As the company succeeds, as it sells more products, hires more people, and levels up in the real world, your tiny slice becomes worth more money. It's a direct logical reflection of the business's success.
Awesome. Level 1 complete. Let's move on to level 2. 2 ways to profit. This is the scoring system.
Now, what's really interesting about this slide is how you actually win or make money once you own that piece of the company. It's surprisingly straightforward, really. There are 2 distinct, separate paths. Path 1, the stock price goes up. You bought your piece for $10, the company does great, and suddenly someone else is out there willing to pay you $20 for it. Boom, profit. But path 2 is something a little bit different, and it's called dividends. A dividend is basically a cash reward just for holding the stock. Think of it like an automatic passive cash reward, or maybe a reoccurring bonus in a game. Some companies make so much profit that they literally just take a chunk of that extra cash and hand it out to everyone who owns a piece of the company. It's pretty much just their way of saying thanks for being an owner. Which brings us to level 3. Why do prices move? The physics of the market.
We know the price can go up and down, but what forces these wild fluctuations from day to day? Well, it turns out this entire complex system really just boils down to the simple universal physics of supply and demand. That is the one single thing that moves prices. It's the exact same reason concert tickets for a massive pop star are super expensive, while tickets for an unknown local band are pretty cheap. It's all about how many people want something versus how much of it is actually available.
It's a really simple cause and effect loop. Good news about a company hits the internet, suddenly way more people want to buy in. Demand spikes, and the price goes up. Bad news drops, people get nervous, they decide to sell, demand falls, and the price drops right along with it. It's literally that simple. News drives demand, and demand drives the price. Let's move to and see how this builds into our final stage. The boss fight, mindset versus mechanics. Okay, so we've mastered the math of the market. We know what a stock is and exactly how it makes money. But the final challenge you have to conquer isn't math at all. It's psychology. The biggest mistake beginners make is panicking when prices fall. When you first start putting your hard-earned money into the market and you see that red line dipping down, man, it is terrifying. The fear of losing money is totally real, and this is an incredibly common beginner mistake. People just freak out and hit the sell button to escape the anxiety, but all that does is permanently lock in their losses.
But looking at the data, there is a massive reassurance here.
Historically speaking, the market always recovers. Economies grow, businesses adapt, and over the long timeline, the overall trend of the market has literally always been upward. Those scary drops, they're just temporary turbulence on a very, very long flight.
And this brilliantly illustrates the ultimate cheat code for the boss fight. Patient investors always win, while emotional investors always lose. If you can master the winning long-term strategy of patience against the guaranteed losing trap of acting on your emotions, you've beaten the game. Don't let a bad day in the news trick you into giving up your slice of the pie.
Because when you zoom out, the facts speak for themselves. The stock market is the greatest wealth-building tool ever created. It's not just a casino for the rich, it is a structural tool designed to multiply value over time for anyone, absolutely anyone, willing to step onto the field.
But only if you understand it. And now you do. You've passed level 1, 2, and 3. You know the mechanics, you know the scoring system, and you know exactly how to defeat that psychological boss fight. The tools are right there in front of you. The trillions are moving every single day. So my question to you is, are you ready to use it?